Are you sure that you want to invest in a fund? Are you sure that you really need a wide range of securities, bonds, and stocks in one package, in a basket? If part of this basket is no longer readily tradable, your fund may be gated, and you are not permitted to sell your holdings for an indefinite period of time. Buy stocks directly. You only need a few stocks. You don't need all this diversification. It's March 5th, 2023. Please subscribe. Liquidity is now more important than ever as the world approaches another financial crisis. If part of the fund or ETF, exchange traded fund, or a hedge fund, or private equity becomes illiquid, you won't be able to get your money back for some time, if ever. At present, some well-known funds which invest in property, real estate, which is normally quite illiquid, they're shut. These funds face a so-called run on the bank once they are open again, and they will be forced to sell at very unfavorable prices. There could be a lot of fire sales, as they say. They have to sell at any price. This could also happen to stocks and bonds, and has happened in the last financial crisis. Also, the average fund is trying to juice up investment returns with derivatives, with leverage, and very large, invisible fees. An investor only needs a few good quality, preferably dividend-paying stocks. In this market, on weakness only, because we're in a market that is very unstable. But having a few world-class names is enough for the average investor. You're diversified enough. You don't need a fund. You don't need to be part of a pool of investors. When you buy a stock directly that you really, really like, you like the management for the long term, your stock is not owned directly by you. It's mostly in street name, in the name of the bank or the broker. That's mostly okay, because if the bank or broker is in trouble, your security will be moved to another bank or broker. And it's a book entry form. But you could also register your security in your name. That's also a book entry form, but when you want to sell it, it's a little bit more cumbersome, but it's in your name. What you don't want is a stock certificate. Now that is very cumbersome and prone to the risk of loss. So If you go for physical gold as part of your portfolio, don't buy a gold ETF because the ETF owns your gold, not you. And such an ETF often only tracks the price of gold or tracks a gold index. Buy gold directly. Check it. Have it stored securely with extra insurance, because you need extra insurance against all kinds of theft and against fake gold. There is a lot of fake gold around. Never, never, ever store valuables in your own home. Your life is at stake. It's not worth it. And you cannot keep it a secret. So take care till next time, and all the best. This was a warning. And please subscribe.